Hey, it's Tim. It's 8:30, and we're looking at emerging markets that have fallen off a morning high. Part of that due to comments out of Rio Tinto that they expect to see metals prices lower in the second half of the year. Definitely seeing that part of the complex. Steel companies trading off a little bit. Dollar at 80.59 is right back to the highs on the Dixie that we've had since this Greek crisis, and since we've seen expectations on the Fed moving faster. So that also putting a lot of pressure on commodities. You see U.S. futures that are trading down, nothing significant, and in fact, I think in the absence of strong volume, though, it feels just like a general drag down here. Technically, the S&P's having a lot of trouble here at the 50-day. I think that's putting a bit of pressure on global markets. We're almost through earnings season, and we really need a shot in the arm, and we probably get that more on the macros now, which continue to be the place where most people are dominated. But on the data front, you had some very weak confidence numbers out in Germany, putting, again, more pressure on the euro, upward pressure on the dollar. Confidence mostly due to weather, but also the bleed through from Greece. Continue to watch that story. But the data in the EM space was pretty good today. South African GDP up 3.2%. People were expecting mid 2.5%. Upgrades for 2010. Expect this to be a market where you get very strong growth this year. African regional growth over the next 5 years is one of the reasons why you want to own South Africa. Keep an eye on companies like Standard Bank, Sab Miller, the brewer, Naspers, MTN on the cellular side. These are all companies that have significant earnings exposure to the African continent. Otherwise, the story is light. We're looking at U.S. futures down 4.5, and I think that's going to dictate the tone. There's been a couple pretty good trading days in emerging. Looks like we've run into a little pressure, and I think that's pressure we struggle with through at least the Humphrey Hawkins discussion tomorrow by Ben Bernanke, and a lot of this will be about where our rate's going to stay, if they will stay at the current levels in the United States. That's it from here.